In this video, Raoul discusses the dirty secret of the American dream. Real wages have stagnated, and many have relied on debt to finance consumption, which ultimately leaves them poorer. He highlights the challenges millennials face, such as the struggle to afford housing and achieve financial security. In response, millennials have turned to unconventional investments like cryptocurrency and technology stocks, which offer high-risk, high-reward opportunities. Powell emphasizes that this intelligent risk-taking has resonated with younger generations as a potential way out of financial challenges, especially given the global debt crisis and stagnant wages. The conversation also explores digital assets as a possible solution to these economic issues.
So I think we're probably in a recession, but it's been this kind of rolling recession. So my view was always it's never going to be a bad recession. It'll more be like 1990, which is a mild recession, but with a lot of overhangs afterwards. Commercial real estate being one. Unemployment will be stickier than people expect because of the rise of AI and other things. But I think the markets priced it in, the forward-looking markets priced it in last year. You know, crypto was down 80%, NASDAQ was down 38%. And then I think that the other markets like the Russell 2000, the oil markets, copper markets, all of that stuff is pricing it in today. Yeah, from our work, we put together, for example, the last 5 major inflations since World War II, and then just map this current one against it. It's identical. They all kind of are the same thing. They go up and go down. It looks like Mount Fuji. You know, it's almost symmetrical. We're seeing it already in Europe where PPI numbers, Norway hit a negative 42% PPI. I mean, this is staggeringly disinflationary or deflationary. So my view is that when we see the kind of November, December inflation numbers in January, we will start to see inflation at 2% or lower. And that will continue, I think, to potentially deflation in the headline numbers. The core inflation and headline inflation is actually driven not by commodity prices and all of this fast-moving stuff. It's actually driven by 2 things: wage increases and owner equivalent rents, both of which are going down, are deflating. And all the forward-looking indicators suggest that they are likely to go negative. So I think there is a chance even of core inflation going negative in 2024, which is very much the opposite of what anybody else's view is. Most people, I think there's myself and Alex Gurovich are the only 2 people who've got this view. Almost everybody else thinks we're going to see sticky inflation. I just don't think we will. So there's a general desire for a recession and markets to fall. And that's driven by people who are really all about how is inflation created? The central banks have destroyed our world, and I want to show everybody that it's happened. Yes, the central banks have destroyed our world, but not in the ways that they think. You know, we've had the use of the balance sheet for over a decade now, and in Japan even longer. It never generated inflation. But they want that inflation because they want to prove that the monetarism is the kind of holy grail that they worship. And it's the people who worship Volcker, for example, come with different angles. So a lot of people are imposing perspectives that they hold from political opinions. And so the narratives become overwhelming. And I've actually gone on Twitter and said, okay, if you think sticky inflation, how do you vote? Sticky inflationists are Republicans in general. And it's just because of how the construct of how people see the world. What I try and do is not look at that. I mean, at Global Macro Investor, we have 2,000 charts. And we just try and use the data and not impose our own views on the data, and see what that comes out with. And that gives us the high probability that inflation just reverts back to 2% or lower. So when you debase a currency, it doesn't let wages go up or even corporate earnings go up. It makes asset prices go up. So those who can afford assets outperform or at least protect their wealth. Everybody else who earns wages and doesn't have much assets, they get their future self. An asset is your ability to put money in now and take it out later. It's future deferred consumption. If you can't buy assets, your future self is getting poorer. That's why we have a pension system. That's why people buy real estate. That's why they buy gold. All of these things. So what they're doing by debasing the currency by whatever the number is, 15% a year, is they are mutualizing the costs of servicing the debt. But it's mutualizing it across the poorer people, which is what makes everybody so angry. Because they don't understand this card trick that's being played on them. It's the same as raising taxes on them all, but they don't realize. They just know that something's not right. Why do my wages not really go up, but everything else goes up around me? Why can't I afford a house and my parents could afford a house? Why could my parents have, a larger percentage in their 401k and I can't? It's because of this. And that's what the central banks are doing. Yeah, the destruction of the American dream has come from that real wages haven't really ever gone up. That's the dirty secret. Nobody really got richer. And everybody financed consumption via debt, which made their future selves poorer as well. And so that's been a real problem for people. So then you say, okay, the millennial cohort, what do they do about it? And I did that piece, that famous YouTube video called The Retirement Crisis, where I said, well, if you're a millennial, you have basically one choice, which was crypto. And that was, 2016 or something, I did that video. And the point being is millennials are very good because they invest in their 401ks. They kind of do as they're told. But it's not enough because you can't get up the housing ladder and you can't do other things. So in 2020, they learned a new trick, which is risk-taking. So with their disposable income, they've been huge buyers of crypto, by far the largest cohort, because it has a massively skewed risk-reward. So it gives them a chance. The other thing they did was trade technology stocks, because they rightly identified that they go up more than the S&P 500 and boring stuff like GE. And then they started trading them with options, because buying a lottery ticket for them is kind of the only choice that they've got. Now, so it is intelligent risk-taking because they're actually still investing in their 401ks. And that's why crypto has resonated so well for people, because they can see a way out. But it's hard because it's very volatile too. But that's why it's kind of gripped the younger people, as have technology stocks. That's why people love Tesla. It might produce amazing cars, but it also has produced amazing performance for people. And people need that because there's no other way, because it's not going to be made up with wages. 2008, every major government in the world of a developed economy hit 100% of GDP in debt. So, okay, and interest rates, let's say 5-year interest rates where they generally finance themselves, have averaged around 2% or less. But so is economic growth. So if you think of GDP as all of the money circulating around to pay for the debt, there's no more money left over. But the problem is, the private sector is over 100% of GDP in debt in every major country. So who pays for that debt? So that's when they started shoving the interest payment debt onto the balance sheets, because the world basically hit the tipping point in 2008, and people still haven't worked this out. But I think I was the first person, and still maybe the only person, who's gone back and calculated all of the interest payments and realized that they are, and the balance sheet growth, and realized that they are just 3.5 years apart. It's the same chart. They just keep monetizing it. And that's the way that they see out of the debt, is to mutualize those payments across everybody by increasing the balance sheet. But the debt doesn't go away because GDP is not growing fast enough. So you have to change the GDP formula. If not, you're in this endless trap where you're printing more and more money, making the rich richer, the poor poorer, ad infinitum. And I think that for individuals, as I said, there's only 2 assets that outperform this. That's technology and that's crypto. Okay, fine. The economy, that's really hard to get this to sort itself out. People are waiting for a collapse, the market's down 80%. It can't. The reason it can't is the central bank debase the currency and it makes the stock market go up optically, because they can't allow the collateral of the system to go bust. So they don't allow the system to go bust, and it creates this ongoing problem. But if you listen to the narratives from the central banks and the governments, what they're really saying is the whole green energy revolution. Europe is massively funding this. And yes, it's good for the planet. Yes, it's good for a number of things. But really what they're trying to do is lower the cost of electricity. Because if you lower the cost of electricity, it has this multiplier effect on productivity. And that's how you can grow GDP growth. The other thing is population. Well, we're shrinking populations, as I said, so we have to replace people. So look at Amazon warehouses. The growth is not in people, the growth is in the robots. The robots work 24/7, 365, they never complain, and they cost a fraction of a human. So every company is incentivized to employ robots to do jobs instead of humans. Then this year we had the nuclear bomb of deflation, which is human knowledge, lawyers, doctors, accountants, creative artists, developers, everybody, and they're replaceable via the infinite knowledge machine that is AI. So that's scary for us as individuals. But if population growth is a large part of the components of GDP growth, you can create infinite people by the robots and AI. So there are schools of thought, even coming out of Oxford University, that says we could hit a tipping point where the GDP of the planet doubles in a year or even a week. Now that sounds extreme, but if you put infinite people or infinite productive units into the economy, you can make infinite goods. Now who pays for the goods? Maybe the machines pay for the goods. We don't know. This is a whole new economic system being built in front of our eyes. This is something I call the exponential age, which is where all of these technologies are coming together, from energy to AI, to robotics, to EV, to space, to 5G, 6G, all of these things, biotech, all coming together, genetic sciences, to create this fastest period of technological change in all of humanity.